What's up, YouTube? AKA Mr. Trade Hustler here with another video. I hope you really enjoyed this video. I put a lot of time and effort and energy into making this video, but I think there's an excellent opportunity in the market with Netflix. Netflix is a premium subscription service that nearly everybody uses, and after you go through the video and you see it on my bullet points of why I think this is a great company to invest in, especially with the stock split coming on November 17th. They're doing the 10-to-1 stock split. That's going to make the average price of Netflix about $110, $120. I think long term, if you continue to buy shares, even if you buy options with this particular company, you're going to make a lot of money. If you need help with finding and getting companies that you think are going to be good bargains at good prices, join the Trade Hustler community where we do research on different companies as well as buy option contracts and take advantage of the volatility in these particular companies. Once again, this is just my opinion. It's not financial advice. Consult a financial advisor if you're looking to invest in the market. What Kevin is doing is opportunities that I see in the market that I'm going to try to take advantage of. And if you want to be able to take advantage of as well, you can. So let's get right into the video and I hope you enjoy it. All right, we're here to talk about this amazing company. How's everybody doing? Kevin here with Mr. Trade Hustler. Discord, always providing opportunities for you to invest in the market. There's always opportunities in the market to make money. You just got to know where to look. And once you do your research, Yahoo Finance is always posting about different things that's going on. And we have this amazing company called Netflix getting ready to do a 10-to-1 split. That means every share price will be about $120 to $100 and probably $130, $140 by the time the split is over. And we're going to do a deep dive into why I think this will be an excellent opportunity to buy the company, as far as how this track record has been going up until this point. And if you invest in this company from now to the next 5-10 years, I think you'd be very happy to read the results turn on your investment. So let's get right into it. As you can see, the revenue continues to go up year over year. 2022 is 31, 2023 is 33, 2024 is 39, and it continues to grow up. The gross profit margin continues to increase. They're keeping their expenses the operating expenses relatively low, and the operating income is also increasing. And also their net profit, look at their net profit. In 2023, their net profit was $5.4 billion, and in 2024 was $8.7 billion, right? So, and then as you look at the bottom, you'll see that the profit down here as well. You'll see their profit was 22%, right? The net profit was 22%. So it continued to go up, went up from the previous year, which was 16. The year before that was 13. So this is a very well-run company, and I think it is going to do well in the future as far as their investments. Number one, this is not financial advice. This is what Kevin is doing in the market and opportunities I see, and you might be willing to take advantage of these opportunities if you do your own analysis and come to determination if this is a good investment for you, right? So now we're looking at that balance sheet. The balance sheet, they got long-term debt of $13 billion. Last year it was $14 billion. The year before that was $14 billion. So they're decreasing their long-term debt. Current liabilities are $10 billion. So they're making more money than they have liabilities, which is always a good thing when it comes to running a company. If you have more income and more profit than you have liabilities, that's always a good thing. It shows that you have a strong company. Now look at the cash flow statement. The cash flow statement, as you can see, the operating cash flow continues to go up year over year. 2023 was $7.2 billion. Now it's $7.3 billion. And they have free cash flow of $6.9 billion. So that means the company can operate for an extremely long period of time because they have free cash flow to help them continue to operate, even if some segments of the business continue to fluctuate. All right. And now we're going to look at the analyst rating. The analyst rating had 49 analysts, and the recommendations for this company is a buy. Yeah, 26 analysts recommend a strong buy, 8 analysts recommend a regular buy, and 13 analysts recommend a hold. Yet 1 sell and 1 strong sell. But the average price target for the next 12 months is $1,346. So, of course, that's going to be adjusted once they do the stock split. Industry recommendation as of 10/22/2025 is a buy. And as you can see, here's their forecasted and earnings that they posted the last almost 2-3 years. And as you can see, just from looking at the last 2 years, they've only had 2 times that they didn't meet earnings per share. And they met every year. The year-over-year change, but it's increased every year, year over year. So that's a good sign for a company that's continuing to do well. You want to see earnings per share continue to have beats every year. You want to continue to see their revenue continue to increase. All right. So we're going to get ready to get into this EPS surprise. It says -15, and I'm going to explain to you why it says -15 on the next slide, so you can have a better understanding. Well, what this company is doing so well, why is it showing that it has a -15 EPS earnings? It's kind of blurred when you think about it and the reason why they have it, but it's a one-time tax hit, and we're going to get ready to get into that. All right. Netflix. It says Netflix announced some exciting news recently. It's enacting a 10-to-1 forward stock split effective November 17th. So that's upcoming this Monday coming. It's going to be doing a stock split. Stock splits can be exciting for investors for multiple reasons, including because they open access for new investors who don't use brokerages that allow fractional share purchases. Investment strategy involving options are also easier when the share price is smaller. This is Netflix's first stock split in over a decade. It last split its stock in 2025. Companies often see their stock price point rise around a stock split to factors like those mentioned above. Some investors like to capture those short-term gains by buying shares. However, that's not a great reason to buy the stock. Instead, the investor should focus on long-term metrics to guide whether the stock is a buy or not. If this guidance suggests a buy is a good idea, though buying around the time of a forward split can sometimes be beneficial. All right, so they just told you that this company, you should buy this company if it's a good company, which I believe it is, in my opinion, with all the success they had over the last 10, 15 years. So I think this definitely is a good buy. So they say you buy a company that you see that you're going to have long-term gains, and I plan on buying options and I plan on buying shares for this company as much as I can while the price is low, 120, 125. I think that's a great deal at that price. Netflix revenue growth is accelerating. It says in the streaming race, Netflix was one of the first movers. Its early success in streaming disrupted the linear TV world and forced many media businesses to offer their own streaming platform. While many have tried and some have failed, Netflix offering is one that viewers tend to come back to or never cancel in the first place. This has helped Netflix enjoy relatively consistent growth even as it develops into a fairly mature business. Also, Netflix regional performance is impressive across the board. And down here you see a chart of the regions, US and Canada. Year-over-year growth is 17%. Quarter Q3 revenue total is $5.1 billion. And you have Latin America, you have Asia Pacific, and EPEA, I'm not sure what that stands for. Maybe that's Europe, $3.7 billion. So you see their numbers are very strong year-over-year growth in all these different regions of the country. Netflix valuation isn't overly expensive. Some stock outrageous value due to the hype around artificial intelligence, but Netflix isn't in the same ballpark. While its stock is far from what most investors would consider cheap, it isn't so bad compared to other big tech stocks. All right, so they think it is fairly valued at its price, and it'll be even a better value on November 17th. Now let's look at Google Finance and see what Google Finance is saying about Q3. Q3 2025 earnings. The company reported strong Q3 sales and a positive Q4 outlook, but missed earnings estimates due to a $619 million tax dispute in Brazil. So the reason you see that number on the other page, negative 1578, is because of that tax bill from Brazil. So that's why I said it's kind of tricky that you think that they didn't do well on earnings, but they actually did because they had to pay this tax bill. It says ad support tier. The company's ad support subscription tier continues to show strong growth, reaching 190 million viewers in October 2025. Ad revenue is projected to double in 2025. Content strategy. Netflix is focused on its content lineup, including live sports, gaming, and original productions like the animated series Demon Hunters, to drive long-term growth. So Netflix has a lot of amazing things going on, and if you know, like I know opportunity when I see it, and if you don't think this is a buy at this time, maybe it's not for you. But anybody that's looking to try to grow their investment account and looking to be a part of a community that's helping people obtain wealth through solid investment strategies, join the Trade Hustler community. The link is going to be in the bio, and we're going to help you grow your portfolio like we've done many other people, and provide great technical analysis in helping you to try to gain the strength in your portfolio like we have done with many other people. So if you enjoyed this video, please like and subscribe, leave a comment, and we look forward to doing many more videos to help you to obtain the success you want and you're looking for in the market when it comes to your investment. Well, that's my video on Netflix. Like, I proved to you why it's a good company to invest in. And let me know what opportunities that you might see in the market that you would like me to do a deep dive in, so we can take advantage of these markets together, because there's more than enough money out in this market to make for everybody, right? But you just got to know what you're doing, where to look, and how to take advantage of it, and know when opportunities present themselves to be able to jump on it and not hesitate and second guess yourself. So if you really enjoyed the content, if you want to enjoy the community, the link is in the bio, the Trade Hustle community. We trade options 5 days a week when the market's open, except for holidays, of course. And we also do long-term investing. So like, subscribe, leave a comment, and we look forward to seeing you in the future.